Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss the macroeconomics of the market, this week in the market, and what the Fed needs to do to fix it.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, October the 2nd, starting a new month tomorrow in the market. And it's not looking too hot. I mean, we're at as low as we've been since this all started at 357 on SPY. And even if you're just looking at like a month chart, I mean, it's just down. What are your kind of takeaways from this? Is this just like what we talked about on Wednesday of this is just the continuation of the downtrend?
Yeah, this one is pretty ugly because the monthly candle closed, and which we'll go into in a little bit, but where we closed at is really important because it really doesn't feel like there's too much below until we get closer to like 300. So yeah, I don't know. It's just really ugly. And also some of these names are still not incredibly beat up. Which is the bigger thing of this, is that like if Apple, like we saw this past week, well really I'll say the past 2 to 3 weeks, Apple has finally started to crater, and when Apple has started to crater, it's absolutely smoked the market. So if Apple does continue to crater the market, I mean we're gonna be in like a really ugly situation really fast. And I think that that's the important part here is that, you know, like the first move down was without Apple cratering the market. Now that Apple, you know, has these headlines about the iPhone 14 not selling, about supply chain issues, stuff like that. You know, if that continues and Apple truly does see a pullback to like 130, 120, the market will just get killed. So I think that that's really, and the same thing with Tesla. I mean, Tesla is still hanging up out there. I mean, Tesla showed incredible strength during this recent next leg down, and so if Tesla and Apple start to crater, I mean, the market's going to get smoked. And I think that that's the really key point here, that we're in the big downtrend, we could see bear market rallies. But you figure, even if we rally from this point back up to 385, we have a better chance at seeing 300, in my opinion, than seeing 450. But and again, something we'll talk about later is that this is going to set us up for the next few years. Some really good dip buying opportunities are starting to come into place. And again, we'll talk about that, but. It's exciting. It's not exciting to see for people close to retirement age, but for us who are looking to really get into the market, and us younger people, we may never see these prices again once they go back up. SPY might never see 360 once it goes to 450 again, and so this is our opportunity. So even though inside the short term it stinks and we hate to see it, we got to think about the bigger picture here. It's almost like during the COVID crash. When the COVID crash, it was terrible. But now that we look back, we're like, wow, those were great buying opportunities.
Yeah, no, especially seeing how fast it rebounded, but obviously totally different scenarios. And you did just mention old people and retiring. Do you have any like recommendations for people with their 401ks and stuff if they are approaching that age and you kind of see the market how it is now, not knowing how long it's going to take to rebound, how low it'll go? Like what kind of advice would you kind of give to those people?
Yeah, so ideally, if you're within 5 years of retirement age, you're not really in anything risky. At the worst, or at the most risky position, maybe you're 50-50 or 60-40. But really, at this point, I'm hoping that you are, really close to like 80-20 risk. Like you're really not in anything crazy risky. And the other thing is that, ideally, you've set up a situation to where, you don't have to take out your entire retirement at one time, and that's the important thing is that if you have to sell off a little sliver or, a small piece of your retirement, that's okay. That's just the market, like if you've made a ton of money inside the market through your 401k, which over the last 60 years, you definitely have, then taking this beating down here really isn't too bad because inside the grand scope of things, you're still up probably 1,000% on your portfolio. You know what I mean? So like in that perspective, you got to put everything into perspective. Like if the market was at like 200, then I'd tell you, maybe go pick up a job instead. But at this point, it's one of those things where it's like, listen, you're still up a incredible amount of money over the last 50 years. And, you got to just kind of bite the bullet. It's an unfortunate event. But, if you do have to dip into retirement down here, then it's okay. And just take out what you need. I wouldn't suggest taking out your entire retirement right now to like buy a sports car. Maybe hold that off. But then on the same token, as I'm saying this, I'm thinking to myself, you only live once. You're not taking the money with you. So again, I think the biggest thing to note here is that it's okay if you have to take out your retirement down here. Did you have more money inside your 401k a year ago? Yes. But would you have had this much money in there if the market didn't go up 1,000%? No. So I think everything comes down to perspective. And the bigger thing is that, maybe now if you're on the fence about switching to a less risky portfolio, you can still do that. Will it take more time to make that money back? Yes, of course. But it's never too late to switch to risk off because at the end of the day, can the market go lower? 110%. And so if you don't go to less risky and then the market continues to go down, you're going to be kicking yourself. Don't hope and pray that the market goes back up.
All right. Well, before we get into some more of the overall market and macroeconomics of things, two things, actually. Just in case anyone notices that Hugh isn't on his podcast mic, he is recording in a car right now while he's driving. So apologies for that. And you kind of want to talk about your Tesla trade. So you want to talk about one last week. I have one that I think will have a pretty big reaction on Monday. You ready? This is speculative. All right. So Dish, and this happened 7 hours ago. So not gave their customers no time to react. They lost, let's see. Disney networks, including ABC, ESPN, and FX, all go dark on Dish and Sling TV amid carriage dispute. So that means everyone that has Dish or Sling, which is basically an app for TV where you just buy the channels you want. Everyone that woke up ready to watch college football today that had Dish or Sling, Couldn't find their ESPN channel. Couldn't watch their fucking games. Oh, feeling that will kind of fuck them up. Because, I mean, that's kind of been going on for a long time. Even, like, DirecTV had issues with, like, ESPN. I remember YouTube TV was fucking having issues. I was like, fuck, dude, that's all people use cable for now is sports, really.
Wait, so what is, sorry, so ESPN pulled their channel?
Yeah, from Dish and Sling. It's ABC, ESPN, and FX. So it's a mid-carriage dispute. The dispute comes at an inopportune time with ABC just disputing its new fall season. So yeah, there's just like dispute amongst the two. And it's like based on their deals and shit. Yeah, Dish meanwhile said that Disney was demanding $1 billion increase in fees and was investing in services like Disney Plus and ESPN Plus, which are not included in the cost of a Dish subscription. So it's kind of, they're probably being like, yo, all your shit's on your app. We want them to keep using Dish. You're not really helping us out. So it'll be interesting to see.
So Disney's just a bully.
Could be. I mean, you got like whenever Disney Plus came out, everyone's like, "Oh, this is the new Netflix." I haven't really heard much about Disney Plus since. You know, they gotta strike back, man.
That's insane. Okay,
no,
yeah.
I can't imagine how many kids got called by their parents like, son, I can't watch my fucking Crimson Tide play today. You need to get your ass over here and log into your fucking YouTube TV account.
What shit did you do?
Yeah. Yeah, son.
Wow, that's incredible. Yeah, so question, and I'll look at this later. I wonder if there was like a large amount of puts bought on Friday on it. I wonder.
Yeah, no, that's so Dish and Sling are both under the Dish stock, so you can. Yeah, if you want to look, it's just the ticker's Dish. It closed at around $14, so we'll see where that's at.
Did it get smoked on Friday?
No, it only dropped 2%. But the thing is this literally came out like 7 hours ago. So we're recording on Saturday. This came out probably midnight or like 10 p.m. on Friday. Like I think this like everyone knew about the dispute. No one knew that this is finally when it took off.
Yeah, I can't believe that they can just do that.
Yeah, no, it's like just at the.
So I just looked at. Oh wow. Yeah, okay. There's a lot of puts. Someone bought a lot of puts on Friday. There's a lot of open interest on puts.
It's fucking Walt Disney the Fourth.
Yeah. Could you imagine? Okay, wow.
The brain of Walt Disney's just in that under Disney, just day trading and AI.
Yeah, so I'm just...
Fucking algorithms.
Yeah, exactly. So I'm just looking at like Dish. Like I just searched up Dish on Twitter and wow. Yeah,
they're not happy about it.
Oh, no.
You gotta think like a lot. Go ahead.
No. I was just gonna say someone that I follow bought Dish on Friday.
Oh, damn. Yeah, I just can't see it just doesn't seem like many of these cable companies are really doing a lot. And I used to sell DirecTV, and trust me, we pushed the shit out of our app.
That's right. I forgot about that.
Yeah, dude. I went door to door selling AT&T products, man. You needed internet, TV, or cell phone. I fucking had you anywhere. So
I'm just trying to see if I can see how many puts. Oh, yeah. Wow. Massive open interest on Dish. On Dish, March 2023, $10 puts.
Yeah, those are probably going to be up a good bit.
Yeah, they're going to be.
Yeah, no, it's.
Oh my God!
It's interesting.
Someone bought $200,000 worth of November puts. I wonder if it's like a CEO of Dish or something, or like not of Dish, ESPN like told their son like, oh yeah, like tell your friends to drop Dish because they won't be able to watch college game day, and then him just YOLOing $200,000 in puts. I'm sure,
yeah, dude. I'm
sure there will be an article about it if it is.
Yeah, man, it is. It's crazy though. I mean, like, so many people are just gonna have to get on with the streaming era, dude. And they're gonna have to move on. I mean, between this and the NFL going on Amazon Prime on Thursdays, dude, they're really moving it. And the thing is, Sling, those have like a lot of the lower income folks like were able to still watch sports and shit. I mean, because unless you're like illegally streaming it, I mean, because most people probably just have like Netflix and Hulu now and no satellite except for sports. And Sling, at least you could just pay like $8 a month just to get the ones you wanted, So it's kind of inconvenient for all these people, but yeah, we'll see where Dish goes.
Yeah, that's terrible. That's terrible. Yeah, you know what? That's something I want to keep an eye on because similar to what was the stock? You know what else? Sorry, now that I'm thinking about it. Honestly, Fubo could be a potential player for this now. Because doesn't Fubo offer sports?
Oh yeah, Fubo does. One of my friends uses it. Like that's how they watch most of their games.
So maybe this is a market opportunity for Fubo. And obviously over the last year, Fubo's gotten killed.
I feel like YouTube TV has the most customer basis to gain. It's just there's no stock for YouTube TV. You just had to buy like all of fucking Alphabet, Google, or whatever the fuck it is.
Yeah. And I'm just I'm looking at the Fubo chart while we're talking about this, and I mean it's trading at 357. I mean it's just gotten killed.
Dude, I had fucking because I had some calls on for some reason Fubo's still on my home screen. And just recently, look at the month chart when it went from 350 to it went to like $6, dude, and it pissed me off because after TD Ameritrade kicked me off, like I had a few of like some random shit, and I just had fucking Fubo calls because I was like, damn, this is kind of beaten down, and that pissed me off because they probably would have been really high. But yeah, no, it does look like it has room to bounce back, especially now that, I mean, you look at what happened just 2 weeks ago. So it'll be interesting for sure.
Yeah, no, I mean, it's got huge room to bounce back, I think. And it'll be really interesting because not only just from like a quick trade perspective, but, inside a market like streaming, I feel like to actually gain true market share, you need to already have the infrastructure put in place, which obviously they do. And you need one of the Goliaths to fall. And so
it's not like what was that penny stock that was the cartoons like in 2020 that everyone was it fucking just over the X? Right? Oh, I thought it was an X.
I don't know. I know what you're talking about.
I do remember it went from like 40 cents to like $10.
Yeah.
Stan the trading man was big on that one.
Genus?
Oh shit! Was that it? Was it Gina? I remember Genus. Let's see. Yeah, no. It's down to 60 cents. No, I think that was entertainment company. So maybe it was.
Either way, insane.
Yeah, whatever.
But yeah. No, so, this actually
because it's like yeah. Because I mean, Fubo. I actually whenever we were trading it previously, I didn't know it was like actually like fucking real. But no, I mean that's really how we watch like some of our games. So. No complaints on that. But no, it is an interesting thing, especially I've said interesting so many damn times. Super interesting, guys. But no, it's crazy just that, you'll see these market opportunities pop up and thank God it happened all weekend. We'll see maybe if we can take advantage of it. And we'll check that out. And I know you wanted to talk about a Tesla trade you made and you wanted to kind of update people on how you're going to keep playing it.
Yeah. So the one thing, and this is, well, first, let me start off with, as a lot of you know, I started to do a monthly mentorship and with the commish who we had on the podcast.
Trades.
Yeah, Adam Silver Trades. And it, first off, the support is insane. We got more applications and the wait list right now is like we're only taking 50 to 75 people every month. The wait list right now is months long. But the way that we're basically doing it is that, it'll just be first come, first serve every month. And so it doesn't matter if you get on the wait list today, tomorrow, in a month. We're just going to send out the email every month and whoever gets on, gets on. So first off, like I said, thank you all so much for the support. It's been incredible. It truly. And so we start the first month on the Monday, but oh shit, I think I'm about to be pulled over. Hang on.
Oh, please, dude, if you get pulled over mid-podcast, I think you have to keep the recording on. Do we just add that to the end?
Could you imagine? Oh, man.
Yeah.
Hang on.
He's like, are you on your phone? Be like, no, officer, I'm on fucking 2 of them.
Well, I mean, I have my AirPods in.
Also illegal, I'm pretty sure.
Is it really?
Yeah, because I'm pretty sure that, and this may just be some shit my dad told me and was just doing it so I wouldn't do it. But if you have headphones in while you're driving, you can't hear emergency vehicles and shit.
Holy shit. I didn't get pulled over.
Good shit, dude. Congrats, man.
Wait,
use that extra 180. Wave at him.
I think he should be talking. Okay. Wow, I am sweating. Okay.
Are you driving a little fast?
I mean, it's New Jersey. Everybody drives above the speed limit.
Oh, damn. Fucking dangerous state, man.
Wow. Okay, I'm sweating. I need a second to recoup here. Jesus.
Drive safe, kids.
Yo, he literally...
I know everyone's probably driving to work while you're listening. Just make sure, drive the speed limit so this doesn't happen to you as well.
He literally comes up. There's a car in between us, and there's no room to fit between me and the car behind me, and he makes it fit. So I'm like, oh, I'm definitely getting pulled over. Like, there was no reason for that maneuver. Wow.
Oh, fuck them, man. Well, at least you're alive. We're good. No one's pulled over. We lost some quality content.
So, like I was saying, the support that we have received has been incredible. I was up in Greece one night in Mykonos. I came back from it wasn't a club, but it was like going out. Like, I came back from going out, and I worked from 1 a.m. to 5:30 a.m. because there was just so much to do. But it's been really cool. I gave everybody that joined this month my number, and it's really just been fun because it's like now I have 50 extra or 70. Well, actually, we upped that a little bit. With 90 best friends who are also trading stocks. So it's been really cool because you know how hard it is to find friends that actually trade. Nobody trades. So this has been really cool to do and to see, and I'm really excited for it. But that leads me into a few things, which shout out to Penny Lane, who Penny Lane made $1,300 this week, which is wild. Great job. But I talk a lot about on this podcast. I talk a lot about my strategy and what I look for and things of that nature. And if you pull up the Tesla daily chart, it is exactly what I look for day in and day out. I talk a lot about double resistance, and I talk a lot about double resistance and double rejects off of key levels. And so that 310 area on the daily chart, you can see it reject there twice. And so, as I always talk about confirmation. So on the daily chart, you see the 310 reject, then you see it come down, then you see it come back up and reject the 310 again, and then it breaks down below support, and you make a good amount of money. That's the same exact setup that I look for time in and time out again. Okay, and again is that I'm not looking to get in at 309 when it rejects 310. That's not a full rejection. I am looking for it to reject 310 and break below support. Okay, and so I took the trade. And I posted inside the Discord, and I'm up 15% on one of the options, and I'm basically flat the other two, and and I have further out strikes. But this is one where if we're able to get below this key level, I think we could see a really, really nice move down on Tesla. And so obviously I'm not going to give everything out because that's the whole point of the mentorship, but we're already up a good buck, and I think that if as long as the market stays heavy, which again, with QE starting next week, the market's already illiquid. With QE, it's going to become even more illiquid, and I think that bodes well for my Tesla short. So that's what I'm looking for. My stop will be 311, and I think that this could be a multi-bagger play. It's already worked out well, but you guys are always asking for my strategy, always asking for what I look like, and that is a textbook trade for what I'm looking for.
So I know you used to kind of always talk about how Tesla hedges, and this is kind of like a sentiment that, a lot of finance experts have. They say like it has no business trading at this point. And then obviously the bulls are saying, well, you're not investing in cars, you're investing in a technology company, similar to how Apple wasn't a computer company. It was, all technology for it. Do you think this could be its descent to trading at its actual value, or not exactly actual, but closer to it?
Yeah, definitely. So, and in fact, let me start back up by saying that I originally thought that Tesla was going to get smoked inside a bear market, and Tesla has held up better than most names. Hell, Tesla's held up just as good as Apple and better than Amazon and some of the other names. So, kudos to Tesla, because I really didn't think that was going to happen. However, I will say that I do think that Tesla probably sees a closer valuation very soon. And one thing I did want to touch on, and this is a great segue, is that I'm not sure that stocks see their highs for at least 2 to 3 years. Like during the COVID crash, we saw a very quick bounce back. I'm not sure that if we break below this next support area, I don't think that stocks see their highs for 2 to 3 years.
And where are you kind of seeing this? Is this from historical data of how long it's usually taken to recover, or is this just kind of you spitballing?
So this is really more of like a hunch, I'll call it, but it's just inside the overall action of the market, and it also, like, macroeconomics does play a key in here, because I really do think that you can lower inflation, and inflation will lower by the numbers, but that really doesn't mean much, because things will still stay relatively expensive. Like, I know that we've talked about it a few times, but when inflation goes up, it comes down, but not all the way, ever. It's just really like the government gets creative with accounting so that they can call it different names. Like they can call, the more expensive groceries, not expensive. You know what I mean? So with that, and again, it's more of like a hunch. It's more of like a hunch, is that markets just feel tired. And also, what do they want us to do? They want you to buy the dip endlessly until you get tired, then wash everybody out and then scoop it back up. And then you'll catch just enough FOMO and they'll turn around and I think chop us for a year or two. Like they want to get traders out of the market, because what do they want? They want most of trading to be controlled by the bigger banks' algorithms. So I think that that's a key thing here, is that, we had the great washout, of traders. Now, you still have traders sticking around, and you have a lot of people trying to buy this dip, rightfully so, because the market is down 25% this year. An
interesting thing along with that is that, this September, stocks ended the worst since March of 2020, which was when the COVID crash happened.
Yeah. No, exactly. And so that's my point, is that, like, things aren't getting better as we go down. Hell, things are getting worse. And that's the scary thing here, is that, we want things to get better as we go down. Like now it just feels like the lower that we go, the more difficult it is to keep the market up. Like that's what I feel like is happening right now. So I think that, that's the important part here, is that, you want a market that moves fluid. And with QE starting, I mean, hell, like QE is supposed to be during a strong market. It's supposed to be easy. It's basically supposed to ease a strong market. And right now,
can you kind of define QE and are you talking about quantitative easing?
Well, yeah. So we're going to start. So
okay, yeah. So that's, when you hear QE, we're also about to head into Q4. It can be a little confusing. Do you kind of want to tell people what quantitative easing is? And I know you're driving, so I'll give out the definition it has online, which is a type of non-traditional monetary policy in which a central bank buys a large number of securities to stimulate the economy. Pretty straightforward.
Sorry, go ahead. What did you say? What was the last part? Pretty sure.
Pretty straightforward.
Yeah, no,
and it
exactly.
says when QE works well, the increase in the money supply encourages lending, lowers interest rates, and results in economic growth.
Exactly. And so this is where we always go back to the constant seesaw effect, or the constant we talk a lot about the gas and the brake, the gas and the brakes, constantly, gas and brake. The Fed acts as the gas and the brake at sometimes. And we'll take it, we'll just do a little deep dive here. When the market is, or not when the market, when the economy is tough and the economy, there's not that much spending and the economy is going through a rough patch, that's when the Fed stimulates the market and stimulates the economy.
Yeah, no. So I guess we'll definitely figure out more as the week comes on. This was coming to you live from Hugh in a car. All right, man, we'll drive safe and we'll see everyone next time.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.